Right. So, guys, this session is going to be about quite a few topics. First is can you take stock trading as your full time career? Can you depend on it as an income source, passive or an active income source? Plus, how far can you drive in the certain industry? What is the scope and all? All those questions and such. Just like how you choose engineering and you think that, okay, what is the job roles you have and so on? What is your future basically in the industry? So apart from that, I've also thought of discussing another topic on how you can convince your parents, because most of us are youth and they always go through the scenario where you face problems from the people who are around you, that you they are not supporting you in some stages. So we'll also discuss on that. Plus, here's the best part about this session for today is we'll break down all the myth, and we'll also break down the truth about stock market and the industry basically, and also go through all that problems a beginner faces when he starts off with the markets. Excuse me. So basically, I dropped out in 2018. Okay, we have quite a few people in. I think we can begin. Yep. So I dropped out in 2018 to become a full-time day trader. I think I've told this to quite a few people here. The scenario was like this. I was in my second year, just started off with the second year, and we had a class, and I had a commerce teacher who had a class schedule, right? It was about stock market only, about the basics of the stock market. When you're studying a degree and which is more about commerce, numbers, finance, and you don't even have the basic info about stock market in your entire syllabus, you can understand how shit our education system is. So I had this teacher come down. We had a class strength of 60 to 65 at that time. And during the session, I mean, during the class, she said that stock market is more about gambling. Being a finance teacher, that was really disappointing to me. And the next day, I dropped out of the college. Uh, I wrote a letter to the principal that, hey, I'm not interested, just return my certificates. I didn't get the certificates back that I submitted in the college, but that's a different story. It's still stuck there. So I don't even care about my 10th marks card and all those important certificates that you give when you get down to apply a degree in a normal college basically. So that is how I dropped out in 2018. Hilarious, but that's a fact. Basically, um, when you want to achieve something in any industry, not just in stock market, uh, it's not very much efficient for you to head forward, because you don't get the initial support from your parents or the people who are around you, because that is what is the most important part when you begin something, right? There are few select people like your family, your friends, who are very close to you, and when you don't get that support, it's very heartbreaking and it's very disappointing as well, or it's not that good of a motivation for you to continue what you're doing. So for people who are into entrepreneurship, because I myself run four startups, let's call it three because I'm coming down with the fourth startup. I've worked with a couple of businesses and I'm a full-time trader, right? Because I've gone through that situation where I think most of us might be going through, being youth or being in college and want to do something incredible, something out of the box, and not just doing a job in a different company when you graduate. So in such scenario where you want to start something out and you want to convince your parents that, give me an opportunity, I trust what I'm doing and I'll prove it to you and I'll be successful at what I'm doing. Can't say successful, at least I'm learning something which might benefit me on a longer run. Then if you go and tell this entire thing what I just told you, your parents are not going to believe you. They might love you, they might trust you, but they won't believe you. And because at the end of the day, uh, the methods, the decision that you're taking might be immature in their eye, might be against the way the world work, or might be or it might not be a very strong plan that you can hold on to. So the best solution that you can do at this scenario is, every parent wants to make sure that their child is going through the educational system and you're attending classes, doing your degree and getting them marks and all, right? This is where you need to work a little harder. Okay, you should also concentrate on your academics. You have to give what they are asking for in terms of marks or study time or whatever it is. results or whatever it is. You have to give that. Once you're done with that, once you are giving your parents what they want from you, that is when you start doing the other things in your life that you want to achieve. Okay, when you start this is basically how it works, right? If a person is doing a job, he works in the morning hours, 9 to 5, that is not where he builds his career. Yeah, there might be scenario where people have done incredible in corporate, they make crores together, they make lakhs together per annum, that's there. But for an entrepreneur, for a person who's creative and wants to do something out of the box, that's not where we want to land basically. Moreover, a scenario where you work 9 to 5 in a job, what you do after that matters for you if you are someone who believes in doing something incredible or creating something that's going to solve a lot of people's problem. So just like that, when you're in college, study well, provide the things that your parents want are asking from you. Then you have to work on your other startup ideas that you have. Freelancing is a good way of starting up, or learning a skill set like stock trading or sales, graphic, whatever it is. Now here's the key point. To convince any parent, you just have to have two things in your hand. First is what they aspire from you, what they want from you, that is results. You have to give them that. Second is you have to show them that you're working hard and you're bringing in results. It doesn't matter it's a small paycheck that you got or a big paycheck, the money that you're making out of your idea, but you need to show them results. Once you do that, there will be that trust factor that comes in and they'll start believing in what you're doing. At that time, all you need to do is ask for some time. That, see, I want to achieve something else in my life and I want to do, you know, run a startup or, start a business or whatever it is. I want to do this and I'm not interested in doing your degree or getting a job. Then all you need to do is ask for some time. Give me some time, around 6 months or a year. Let me properly work on what I want to do. And if I fail on my idea after this time, I'm gonna do whatever you ask me to do. You want me to do a degree, I'll do it. Job, I'll do it. Whatever it is. Okay, this is exactly what I did. I basically asked him some time, and 2018 was a time when I was making sufficient money, like a good amount, I can say, and that is what gave that confidence in my parents' decisions that they took, and I dropped out of the college. So this idea you can utilize if you want to do something. Let me see if I'm recording. Yeah, recording. Uh, Guys, please mute. There is slight disturbance. Okay, thank you. Yeah, so this is about how you can convince your parents, be understanding that most of us are youth and are doing some degree or attending college. Now let's speak about the industry, the markets basically. Now stock market is kind of an industry where you cannot completely rely on it. Okay, because it's a game where it depends more about the probabilities that you have. Let's say I assume that the markets are going to give me a certain return per month or per year, and that's not going to be a guaranteed return. Okay, like there can be highs, there can be lows. That just reverts to a point where you are running a business if you are trading in the market. Because in a business, you can't be completely sure. Yes, you can do your analysis, but you cannot be 100% sure that I will make around 40%, 30%, 20 per year, per month, or whatever, right? So stock market is not completely reliable unless until you have good experience, you have good knowledge, and you have been trading from a very long time. um, Slight disturbance, guys, kindly mute whatever it is. Paradox. Paradox, I have server muted you. Kindly tag me and leave me a text if you have some questions. Right, so FSI, yeah, the stock market, you cannot 100% depend on it until and unless you at least have an year or 2 years of experience trading in the market with real money, and you get to understand that what is your returns for the first year, if you have booked losses, how much have you lost in the first year, and so on for the second year as well. Now, for a beginner to move forward in this industry, or to hold on a or get a good grip and to make this a sustainable career, he or she has to go through an entire cycle of understanding the market. Okay, we have some time, so we'll break down what that cycle is. See, for a beginner, when you get started, there are multiple segments in the market. Okay, stock market or stock exchange has a couple of segments like equity. You have futures and options. You have commodities, currencies. Um, what else? Yeah, all these come under the derivative market. Now, in a derivative market, or in the entire segment that you talk about, the first segment that you always come across is the equity. Now, what do we understand by an equity market? Now, equity is nothing but you trade in stocks, spot stocks of all the companies that are listed down in the IPO, in the exchange basically. For an example, companies like Cipla, companies like Reliance, Asian Paints, Tata Motors, all these companies that are there in India. So they are listed down in the IPO, and you trade in their stock, and you basically buy, sell whatever quantity according to your capital that you have. That's moreover how the equity segment of the industry works. To make money out of equity segment, or let's take it both ways, okay, making money and losing money as well at the same time. If you want to make or trade in the equity market, let's say you buy some shares, or I buy one share of Reliance that is trading at 2000 at the moment. So what I'm going to do is I'm going to hold it in my demat, and after some time I'm going to sell the same share on a higher value. Now the amount, the premium at which I have bought it, okay, the price, and the amount that I've sold it for, the difference between that will add up to my profit if there is an increment in the price. But if there's a decrement in the price, that will add up to my losses in that certain trade. That's how basically the entire stock market works. You have a certain capital, you get some commodities, you get some stocks worth that capital that you have invested. Let's not call it invested, let's say you have traded, and you hold it in your demat account for some time, and then you try to see that if the price is going higher, then you can sell it at a higher price, book profits. Similarly, if it is going lower at the price at what you have bought, then you sell it and you book losses. Okay, that's the basic ideology of how the market works. Now, in equity segment or any other segment, trading can be done in two ways. Transaction can be done in three ways. First kind of transaction is intraday trading. Second is called swing trading. Third transaction is investing. And when you talk about investing, you have a lump sum amount, okay? You're not trading with 5,000, 10,000. A lump sum amount, let's say 10 lakh, 15, 20 lakhs, more like future planning, when you are in corporate and you want to save some money or compound your money on a very safer bet and not more of a risky bet. That is when you go with investing. You invest a certain amount in the market of certain companies. Let's say I buy stocks of one company for 2 lakhs, another for 2, and so on. I divide my funds in multiple baskets, more like X in different baskets. So that is when I'm investing an amount and I'm holding that certain amount in the certain stock for a couple of years, 2 to 3 years, 1 or 2 years plus. That is called investing. But for trading, you have two divisions onto it. Okay, guys who are traders, I know this might be very basic information for you, but I'm going very basic so that everybody understands. Okay, uh, so where were we? Oh yeah, the two types of trading basically. The first type of trading is called swing trading. Now, what happens in swing trading is it is completely related to what you did with investing, but the only difference is you're not going with a lump sum amount. You're going with a limited fund of, let's say, a lakh, 2 lakh, or 3 lakhs, 5 lakhs. Anything below 5 lakhs is completely fine. So you trade 5 lakhs and you hold a certain trade for a couple of days, a week, a month. Okay, maybe you hold it for a few months also, 3 to 4 months. Anything below 6 months or a year can also be considered swing trades only. Moreover, that's a big time frame, but let's have a cap of 6 months. So you buy a certain stock, you hold it for 3 months, 2 months, 1 week, 2 weeks, and then you sell it That concept is called swing trading. Okay. And the second concept for trading is day trading. Now, in day trading, if you open a position or you take a trade, you have to close this position on the same day. Now, why do we have this concept of intraday and swing? That is because we have a concept called leverage in the market, right? Now, what do we understand by leverage? Leverage as itself, we use it in different in different markets, different industries. It is moreover a loan that is provided to you in stock market by your broker to trade in the market, and you get leverage for intraday because if you're opening a position, you're closing the same position on the same day, and the leverage is uh, returned back to the broker when you close your position, right? uh, do you have a question? Okay. So yeah, on intraday you get an add-on advantage called a leverage, which is moreover like a loan that is given to you to trade in the market. Now, how is it beneficial, right, for you to do intraday or to choose swing trading? How is it even beneficial? Now, when you are trading with a certain capital, you have a risk management analysis that you do with that, okay? But if you add on leverage to your capital, if your capital is a lakh, you will be in a position to trade, stocks worth of 10 lakh or 15 lakhs as well. Some brokers provide you leverage up to 40x times also. So you pay a certain amount and you get stocks worth more than that. So your risk management and the analysis that you have, risk appetite changes a lot on intraday. When that happens, the risk factor of losing money also increases because the concept, or I can say the chances of making more money increases on intraday, right? So if you're making more money, you are also in a position to lose more money as well. That is why intraday trading is risky. Now, whereas if you talk about the other trading method, which is the swing trading is where you don't use leverage. When you don't use leverage, you're just trading with the capital that you have and you're getting the same worth of stocks. Okay, that's when your risk analysis fits right on point. Even if you book losses, you will be booking a certain percentage out of your capital, let's say 5%, 6, 7, 8, 9, 10, whatever your setup is, right? So the concept of risk management is much safer, is much efficient if you want to start your career in the stock market because the risk factor is less in it, right? So now that you have understood the concept of intraday and swing trading and investing, is there any questions related to this? Hi. Mhm. Basically, there are a lot of courses that you can do, like certified courses from SEBI, and there are a lot of institutes as well. So you can get job roles as a technical analyst or a stock market analyst, or you can also play a role of a fund manager in any institute. Mm, For now, I wouldn't recommend any of those courses because personally, I've not done any. I'm moreover a technical analyst. Mhm, mhm. Moreover, impossible. If you know the CEO of that institute, then you can make a deal with them. But regularly, it's not possible. Yes, you have to be certified to get into the financial roles, job roles, basically. Guys, let's not get diverted from the topic. I have limited time, and I want to make sure, for that. Yeah. So, questions regarding the certain topic is much appreciated. Okay. Now, yes, sure. So, leverage is moreover like a loan that is given to you in the market by your broker, so that you can trade on a higher quantity, and your position can be higher than what you regularly trade with. Let's say I invest a lakh in the market. Okay, my bad, not an invest. I trade a lakh in the market, and I, use the concept of leverage by my broker. Then I can get stocks worth 10 lakhs as well. So I'm giving out a lakh and getting, products, stocks, commodities worth 10 lakhs into my trading account. So your risk management or your risk appetite increases. Mhm. It's coming from the broker that you're using. Okay. Uh, in a general sense, yes. When you trade in the market, that extra amount is paid by your broker. Not really. You're becoming the clients for the brokers. Brokers are basically middlemen between you and the market, and you're using their interface, their platform to trade in the financial markets because you cannot directly access the market, uh, and you need a broker for it. Well, that's what I said. See, brokers are middlemen that you use to trade in the financial markets. So you're paying it to the broker, and the broker is making sure that the transaction is settled at the exchange, and you're getting the stocks that you have ordered for using the concept of leverage. Right? Now, I'll give you an example. Okay, I'll make it easy. Let's say I'm trading with a certain amount, X amount, and I can get stocks worth Y amount. Okay, now the leverage will just add on to the Y quantity of shares that I have, right? So I'm giving out X amount to the broker. The broker will make sure that he adds leverage onto it and give me Y plus one or plus whatever leverage that you have used, and it is transferred to your trading account or your demat account. But here's the fun part. When you use leverage, you can only hold that certain trade for a day, because you don't get leverage for trading on delivery or for holding your certain positions. You get it only for intraday in equity. Mhm. Okay, that's a different question. Let's not get diverted. Okay, I'll move on. Kindly ask questions related to topics only. In the last, we'll have a quick Q&A where we're gonna answer all these other questions. Okay. Yes, please. Now that's a different question again. So this is like the fifth time I'm telling you guys. How is it different from? I'm not pretty well aware of the shared loans that you're talking about. Leverage is more of, as I said, a quick loan that is given to you on intraday. Yeah. Okay, let's continue with the topic. Go ahead. Yes, Preet, I can hear you. Hmm. Basically, what happens is when there is a lot of volatility in the market, or if a certain stock is highly subscribed for a certain day, then what happens? The MIS leverage is blocked on Zerodha. I'm giving a general example on it. And there are also other types of leverage that you get with different order types that you go with, using your brokers. So if there is high volatility in the market, or if a certain stock is on news, okay, there's a news based trading going on. For an example, let's say we have a certain company, let's say Yes Bank, okay. So S Bank CEO, when there was a news on that certain company and the price was dropping, he sold around 5 lakh worth of shares in a single day. What happened when this news was out in the public? A lot of people were, in panic, and they started shorting the stock. That is when the brokers that you have in the market didn't allow you to use leverage, for an example. So in such cases, you cannot utilize leverage. Not really. We have these exchanges who take care. These brokers are basically listed onto these exchanges, and they are certified for what they do. So I think they have their own way of working in the market. So there will be a circular that is passed on to all the brokers that this is a stock and you're not allowed to provide leverage on the certain stock for that certain day, and they'll have to accept it. And if they don't accept it, there will be regulations according to the rules that they have accepted. Yes. I have a list of topics to cover for today, and I'm running short on time, so not today. As I move on to different topics, if it is related to that, you can go on. Hmm. Okay, that's a very long discussion now. I'll skip that question for now, and I'll move on with the topic. Okay. In the last, you can please ask me. I'll answer to that. Right. So, as I was saying, we have different segments, and the first segment we spoke about was equity. Now, the other segments that you have in the market is commodity, currency, and futures and options. And let's start off with the best topic, that is futures and options. Now, what happens is people who make money in the market, right? Like you might see people sharing profit screenshot videos and whatnot, all that. The big money that people make, the traders make, not big people, basically, is moreover in futures and options, the FNO segment, because the concept of leverage, which I just explained to you, is moreover a lot powerful when it comes to FNO segment, and not much of a powerful, in equity, because in equity you need high capital, you need actually a very good capital to get more quantity of shares. But what happens in futures and options is you get this added on advantage of leverage in both future contracts and option contracts. Okay, now I'll be a little quick here to explain you what FNO is. Now, futures and options are two different derivatives of the market. They both have their own, expiry dates. They have their own way of working in the market. Now, if you talk about future contract, they run with an expiry time of a month. So every single month, the certain future contract expires. And in an exchange, you have three future contracts that are valid. And those are nothing but the 3 months in the market. So what is this? December, right? 26th of December. So December, Jan. Okay, can you hear me? Can you hear me? Can somebody just give me a confirmation if you can hear me? Okay, okay, I just got disconnected. So yes, right. So here I'm going a little quick. So here properly. Okay. So future contracts. Yeah. Okay. Got it. Okay, so okay, okay, kindly mute your mic. Some disturbance. Right. So future contract has 3 months of expiry. Future contract has 3 months of expiry. Yes, that's done. So let's say we are on a certain month. What is it? December. So December, Jan, and Feb are the three contracts that are valid in the market. Now, as soon as December ends, okay, on the expiry basically happens on every Thursday of a certain contract. For a monthly contract, which is a future contract, expiry happens on the Thursday of the last week, right? So whatever date that falls onto, it expires on that certain day for that month. So when is the next Thursday here? It is on 31st of December, right? So on 31st, this month, December month's future contract for any index spot or any stock expires. Okay. Now when that expires, people start trading in the next contract, which is January's contract. When there is an expiry, when there is a December month expiry, the next month contract gets added on to the list. Let's say December contract is done, so Jan, Feb, and March gets added on, and we start trading in the recent month, which is Jan. And then let's say Jan is coming to an end, so Jan's contract is going to end, and the next month will automatically be added in the market. So what is the next month? After Jan, you have Feb, March, and then April, right? Now that gets added on, and this process keeps on continuing. Now, a future contract is valid, not valid. You basically have three future contract for any index, any stock in the market. Reliance has three future contract, Asian Paint, Cipla, Cadillac, whatever it is, whatever stock. Similarly, Nifty has future contracts, Bank Nifty has future contracts. Now we are getting another index in the market called Nifty Financials, basically a financial index, finance index that takes over the average movement of all the financial institutes in our country. So there's another add-on index in the certain division basically. So you have future contracts for that also. So these future contracts, basically the FNO segment, gives you a different overall market to trade in with added on advantage of leverage onto it. Now when you have something of an advantage to you, when you have pros, there are always cons to it. Now the pro point of trading in FNO is the leverage, but the con is the time limit that you have to trade in that market. So if you trade onto equity, you won't be getting that of the leverage that you get in FNO, but you don't have the time constraint to it. You can hold stocks years together, right? But in the FNO segment, as I mentioned, in futures, you have 1 month expiry. And if you buy future contract of December, okay, let's say Monday market opens, right? You get December contract. If you don't square off your position in a stock or in an index that you're holding, it'll automatically be squared off at the end of that certain month. And whatever amount, you're in profits or losses will be booked in your trading account. And that position cannot be rolled over to the next month automatically. If you want to roll over your positions, you have to make a new position in the next contract. Getting it? That's moreover like an example of the time constraint that you have. Now, let's move on to the concept of options. Now, in a general sense, options is the different derivative sector of FNO. Now, in options, you have two divisions. Okay, one division is called calls, and the second division is called puts. Now we'll not get into the calls and puts right now because that's a different long way topic to go in. Uh, let's understand options in this way, that you have one contract, a monthly contract for futures, but you have two contracts for options. One is a weekly contract, one is a monthly contract. In the sense, you have couple of options for different stocks, different index, but you have two division onto it again. The first division is a weekly contract. Now every single week there is a new contract that gets listed down in the market. Let's say this week, for an example, this week is done, right? Yeah, this week is done. So the next week contract is already listed down in the exchange and you can trade in it also. And the expiry date for a weekly contract is every Thursday in the market. So the certain weekly contract that is running will expire on Thursday, which is 31st. Okay, now that's the concept of weekly contracts. Now the concept of monthly contracts works this way, that how we have the concept of future contract where it has 1 month expiry. Similarly, an options monthly contract will give you 1 month expiry. So if you buy calls or you buy puts in the market, you can hold it for 1 month. And again, the best part is you have added on leverage to it and your premiums are very less in the market. For people who are very beginners, this might be a lot confusing, but moreover a basic information that I'm giving out. Now that we understand that future contracts have monthly expiry and option contracts have two different expiry, which is a weekly and a monthly expiry, right? So the advantage that you have trading in FNO is the added on leverage that you get, which is more than what you get in equity. That is moreover how the FNO segment works. Now, apart from this, you have different segments like commodities, you have currencies, two different major segments that people trade in apart from FNO or equity. Let's not get much deeper into that for now. Now, for a trader or for a person who wants to make a career into this certain industry and make it a good income source, what you need to understand that you have to go through a certain process to lead you to an extent where you can actually make money in the market. And we'll dig a little deeper into that concept. So when you look at the markets, the first thing that you interact is with an equity segment. Now this is why I explained this segment to you guys. When you interact with equity, you get to understand that how you trade, how you place your trades, what are different types of orders in the market, how long can you hold your trades, what are the leverage percentage, what are brokers, all these concepts, you get aware of them, you'll try to understand what these are. And then there will be a point when you realize that if you want to actually make money in the market, you need to have more capital for equity, because that is the hard fact. You at least need 1.5 to 2 lakhs to make sufficient money in equity segment. Now most of the retail traders, most of the youth who get into the financial markets, they don't have this capital 1.5 to 2 lakhs, or let's say 1 lakh only. Most of them don't have it, and then they start getting diverted to the concept of FNO, because in FNO you don't need more capital. You can trade with 10,000 also, you can trade with 5,000 also, and you can make twice the money that you are in trading with. Highly possible in FNO, right? So people who don't have high capital, they don't trade in equity because they can't afford it, and they move on to the concept of FNO, which is the derivative market, and they risk more in it, right? That is why I explained this first, that in FNO you have more risk, plus you're also in a position that you can double the amount that you're investing or you're trading with. Now to become a successful trader, or let's just forget about being a successful trader, to start a good plan over, or to have your master plan over how you can build a career, you first have to have three things in your hand, three important things to actually start trading in the market. First is you need a demat account. Second, you need a capital. Third, and the most important thing is you need a skill set. Now the concept of demat and capital is not a big of a deal. You can get that. You work hard for a job, you do freelancing, whatever, you will get capital. The most important part for trading is the skill set. Now here's how skill set works. If you want to learn design, if you want to learn development, you spend some time, you spend 6 months onto it, you learn it, you will get it to an extent where you can start making money and you can start providing services to your clients. But stock market is not like that. You work hard for 6 months, and in a year there will still be major concepts that you'll be missing out. because every single day that you trade in the market, you will be learning something new, because there are multiple dimensional viewpoints on understanding how stocks move, on understanding how prices react to supply demand zones or critical impact zones in the market. That is where the concept of technical analysis comes into action. So you need to be highly aware of the latest trends in the market and how technical analysis works. Now, to study technical analysis, it's more about dedicating a lot of time in the market. You have to at least, trade on a very small quantity, invest 500 or $1,000 for at least 6 months in the market. Now, this is a hard fact to digest, because people don't usually, are patient enough to give so much of time. 6 months, just trade with $1,000 and not make any money out of it, and then also big book losses upon it. But you have to do it to understand the different dimensional view. Today you might find people online, giving you the best strategies. Just go on to YouTube now and search for, intraday strategies or trading strategies. You will get, captions with, this is the best strategy you can ever learn, and it'll make you a lot of money and things like that. You can double your money in a single day. But that's not gonna help. You have to start off understanding the basics of the market and understanding how the most efficient part, which is called price action. You have to understand how price action works in the market, and that comes only with experience. I'll give you an example. I'm trading in the market from last 5 years, and for the first 2 years I've only been learning, and I booked hell lot of losses in the first 2 years. And when I started trading in the market 5 years back, when I just passed out my 10th, okay, I passed out my 10th. It was summer holidays. My uncle just introduced me to the markets. He showed me his phone with all these graphs. That time the internet was not that strong, to use all these charts the way we use now. He showed me all that, and I was very influenced by it. And I learned for like 2 to 3 months. And my trading account, basically not mine, my parents' trading account, I filled it with a lakh that time, and it was all my money which I earned by freelancing. I traded with a lakh, lost and flushed the entire capital, and it happened a couple of times for the next 2 years. And just to recover the money that I've lost, it took me around 1.5 years upon it. Right? So it is a very hard journey to go with, and it's not that easy to see your money just wash away in the markets because of silly mistakes that you would have done while trading. So understand. Okay, 1 second. Okay, so understand the process well. If you're an intermediate trader who's been trading from 6 months or have some knowledge, or you're a beginner into the market and you don't know anything, it's completely fine. What you need to do is first gain knowledge. Okay, study all the materials that you have. Talk to various people who are into the industry and try to understand what they do. What are the strategies they use? Are they using indicators? Are they understanding price action? They are using pivot lines, or what is the main agenda that they stand for in the market, the strategies and all. Once you start exploring and you look at 5 to 10 people, you will learn some or the other thing from every single person in the market. And when you do that, that is when you'll start building knowledge and what this person has been doing, what the other person has been doing. And that is exactly how I gained my trading knowledge. I met a lot of people in my city, Bangalore. I had traders, people who are 40 plus, 50 plus. I had to go onto their home, meet them, tell them, talk to them and understand what they have been doing for a couple of years. That is how you start gaining the real knowledge in the market. Now, technical analysis, you can learn in 2 to 3 months. It's not a big deal. Anybody can do it. But what is the most hardest part is the market perspective. Okay, remember the word, the market perspective. To gain that, you need to go through a lot, experience a lot, talk to a lot of people, and slowly you'll start understanding it. So here's the game plan for a beginner or an intermediate. The first thing you need to do is start with equity. Have a trading account of 50,000. If you don't have so much confidence, start off with 10,000 also, not a big deal. set a certain amount. First, gain all the knowledge that you have of price action. I have my course on Meta. I made sure that course is very beginner friendly, and you all your questions are answered in it. So go through the Meta course, talk to a lot of people, understand what they have been trading, how it goes. Only in equity, okay? Only equity. And then get your demand, get your capital of 10, 50, a lakh, not a lakh, 10, 50 is fine, and start placing trades without using leverage. Now here, when you don't use leverage, you're not making more money. Okay, you will hardly make 200, 300, or 500 in the market, and you're also in a position to lose that also 300, 500, and so on. That might be a little demotivating, but that's the real struggle that you have to go through. So do that for at least 6 months. Okay, trade with real money only. Don't paper trade, and it won't give you that real experience. Trade with own money. Don't use leverage for 5 to 6 months. You won't believe me, in the 5 to 6 months you'll learn a lot than doing any paid courses or doing anything that you have online. Self-learning is the best, I can say. Now when you do that for some time, start adding more capital onto your trading account in the equity segment itself, and then start utilizing the concept of leverage if you want to try out intraday trading. Now the first 5 to 6 months which I mentioned was swing trading. So you have to start off with swing with a certain capital, and get setups or trade, or let's say 5 to 6 trades per week or 2 to 3 trades per week. That'll build up more confidence and more knowledge on how technicals and all the stocks work. Now let's say you're done with it, you're done with 6 months and you have traded. That is when you'll have a little knowledge on how things work, and then you can start doing intraday or start using leverage to be particular. And when you use the concept of leverage, always remember you should never go all in. Never, if you have 10,000, you should never invest. Okay, my bad. Trade the entire 10,000 in the market. Cut it down. Okay, cut it down into the three ratio rule basically. 30% goes in one trade, 30 in another trade, and 30 in another trade. So you're dividing your entire risk into three different trades that you're playing in the market. So if one trade goes wrong, you can still depend on the other two trades that you have placed. If two trades goes wrong, you can also depend on the third trade that you have placed. If both the three trades goes wrong, then accept the loss and you have to get out of the market to study more and to build your knowledge. That's how the industry works. So once you start, doing your swing trades, you know that you're in profits or losses. What are your mistakes? What is the point that you can improve? Then start doing intraday. The problem with our generation people or the youth basically is we are a lot greedier than our parents. We are a lot we need quick results. Not everybody is like that, but most of the traders basically. I was greedy when I started off. So we can't have proper control over our emotions. That is why our parents are much more superior in understanding things better than us, because they are more emotionally stable. They have gone through life than we have. So building that mindset, building that strong decision making skill is very important when you're trading. This doesn't play much of a big role in investing, but trading, it's very important. So that will also be covered in the first 6 months that you're trading in the market. Once you're done with that, start intraday trading with a small amount, 5,000, 10,000, and then use the concept of leverage. Anyway, the leverage concept is coming to an end. By the end of August 2021, the leverage will entirely be taken down from the exchange. Till then, whatever advantage you have, you can utilize that. Now here's the main deal for traders who do intraday. If you are trading on intraday and you have a certain capital, always remember, do first equity. Unless and until you're not profitable, unless and until your P&L doesn't say that you're profitable on equity, you don't have any credibility to go on to FNO. No credibility at all. So get your credibility straight first on equity, book profits, and find better setups, and that is when you can move on to the FNO segment. Now in FNO segment, here's how it works. So if you trade with a certain capital, let's say 10,000, you can make 100% returns on a single day. You can make 200% returns on a single day. Till date, my highest return that I've got is close to 300% returns on a single day on intraday. So it is not a big deal. Okay, anybody can do that. And my trade was taken in futures equity basically. So making money is not the core deal. Okay, whatever money that you lose in 2 years or 1 year learning the market, if you are strong with your basics and your knowledge, you can recover that in 3 to 4 months as well. It's not a big deal. People have done it. So get your knowledge, get your decision making skills, your mindset straight for the first few months, and then you can start expecting to make money out of the market. Till then, you have no chances of booking profits or depending on the certain industry to make money. Clear with this concept? Okay. So now people with this questions regarding this certain topic on what should I do, how should I trade in equity, now you can ask me. Hi. Yes, you do. You can have stop loss for every trade or every investment that you do. So if you're asking me how do you set that for long term, you can, or for delivery trades, you can utilize a concept called GTT in Zerodha. That will help you, place your target and your stop loss according to the percentage that you want to go with. Mhm. Now there are, tens of thousands of retail traders in the market. Okay, so most of the retail traders that we have do intraday only. That will not make any difference for for you basically as a competition or something. And also, if you look at the new CB rules, right, there is a decrement on the leverage that you have over time. Every 1 month or 2 months, there is less leverage will be provided to you, and there will be a time by August or September. I'm not pretty sure with the month. You won't find more of intraday trades going on in retail trading because leverage will not be accessible. Not really. You don't have to quit trading. Can you please repeat that? Every broker provides you leverage. To utilize it, you have to choose the order type that you want to go with. For intraday in Zerodha, it is called MIS order that provides you some leverage. You have two more different order types called a bracket and a cover order. Now in bracket and cover order, the leverage is going to be same, but it's going to be more than what you get in MIS. Okay, because you are accepting a certain condition of providing your stop loss in cover order, which you're not doing in MIS. So in general sense, if you want to utilize the loan or the leverage concept, use MIS or cover orders. There are thousands of sources. Learning is always free. You don't have to pay a single penny to learn about anything or just this. In terms of sources, I have my course on Meta. That's the first I would recommend. I have 4 modules, and if you guys are not aware, Avalon Meta is like an app you find on Play Store or App Store. Download it, go on to the finance section where you'll find Shashank's courses, the first 4 5. Then you have 4 modules of me, of stock trading basically. So first module is basics, second is the complete price action module, then you have trading strategies also. So people who are intermediate go on to the trading strategies. You'll find 5 trading methods that you can use, completely price action. And then you have fourth module, which is about risk management, where you can understand how to, if you are booking losses, how do you manage it and how you can book less losses. So that's the first source. Second source, I would recommend Zerodha really good. I've gone through the entire module that they have. Just Google out Zerodha and you'll find them. Okay, cool. Well, not really. In equity, you need it more. That's the advantage in FNO. You can still trade with less quantity. I'm sorry, less capital. Now, here's the concept how it works. Okay, just one second. Let's say I want to buy 500 shares of Reliance. Okay. Now on intraday MIS order, I'll be paying close to how much is it? Close to a lakh or 1.5 lakhs. But to get 500, which is one lot in futures, I'll be paying around 40 to 50,000. If I'm not wrong, 50 to 60,000. Let's average at 50. So here's the difference. 500 quantity in MIS, I'll be paying a lakh, whereas the same 500 quantity in futures, I'll be paying 50k. That's the added on advantage. Yes. वो इसका एक ही सॉल्यूशन है, वो है मोर स्क्रीन टाइम. आपको कोई सिखा नहीं सकता आप मार्केट में कैसे अपने इमोशंस को कंट्रोल करोगे. जब ट्रेड करते हो, अगर ट्रेड गलत जाता है और पैसा आपके डीमैट से कटता है, उससे ज्यादा उससे अच्छा टीचर कोई है ही नहीं है. कहीं पर भी नहीं है ना. 500 रुपए जाए, 5,000 जाए, 5 लाख जाए, पर वो जो पैसा 1 रुपए भी जाता है ना, उसका पेन जो होता है, दैट्स द बेस्ट टीचर यू कैन गेट टू कंट्रोल योर इमोशंस. राइट. 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 In the last 3 years, I recently calculated like a 2 week back. My returns is around 520% in the last 3 years in total. Last 3 years. Not really. There are chances where I book 180% losses also. On an overall condition, 520 is what I'm running with right now. At the end. Right. Right. On an average, yes, but the way we look at it might be different. There might be chances where I'm booking all the 400, 500% in a single year, and I might book losses for the next 2 years also, or the previous 2 years. Getting it? It varies a lot. Uh huh. Mm-hmm. Right. Mm-hmm. Well, to be very honest, that's very impressive because after the crash in March, there were a lot of investors who were running with very good bull rally had to book losses. They had to get out. So understanding that there is a financial crisis and the pandemic going on, it's a very good number. I definitely don't want to boost on it, but anyway. Now here's the best part about day trading. I'm a day trader basically. Now when it comes to investing, the major problem with investing is if there's a crash, you won't be able to handle that situation because you can't square off your position right on that time. There'll be criterias in the market, and the highest threat for an investor is these crashes that happened, or major corrections that happen in the market. For a day trader, it's not of a big deal. So I was day trading at that time. Exactly. uh, for trading, you should always keep a fixed amount. Don't compound. If you book profits for a month, withdraw it off. And same goes with losses. If you book losses for a month, add more capital and get a fixed amount set for trading. Um, that's a very twisted question. I'm not sure if I want to answer that or not. Four figures you can count. Figures. Okay, I'll give you an example. My uh go ahead. Okay, okay, I got your question. How do you select stocks for trading basically? Day trading or swing? See, for swing, it is moreover depending on a pattern break in the market. If there's a good pattern break on a higher time frame, you can go with swing trades. And for day trading, you can make money in any stock unless and until you have volatility in a certain stock. So here's the best way of looking at it for day trading. Wait till 10 a.m. in the morning, 10 to 10:30, and see what all stocks have given you, an increment or a decrement of at least 2% on their daily move. That indicates that there is good momentum in the price of a certain stock, where you can, find opportunities for either buying or selling in any stock in the market. So go to NSE. Yeah, please. Hmm. 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 Well, that is the concept about trading. You basically predict what's going to happen on daily basis. Okay, if I start analyzing a stock right now, if I analyze Reliance, I'll be in a position to say that okay, Reliance is going to be bullish tomorrow or it'll be a bearish kind of a momentum, or I can also land up to a decision where I think that it can either be bullish or bearish, looking on how the market opens tomorrow. So that is the analysis that you do with technicals, basically. In terms of technicals, I'll have to look at the chart. Uh, who knows if the price, or a certain stock that you're talking about would have dropped over time and then there's an increment. But let's say it's a very fresh move, okay, and there is the stock giving an all-time high. Then it is technically not possible to predict the high of the market. In simple sense, uh, this is a legit fact in the market that nobody can predict a high and a low. Nobody can catch a high and a low in the market, and it's moreover impossible. Yeah, please go ahead. Right, sure. I'll answer your question. I'll just answer the other question. The tools that you can use for trading is the best is use the terminal provided by your broker. If you're not happy with the charting system and all, then you can go with TradingView. And the best tool, not a tool, the best source where you can look for is NSE India website. The best gainers, losers, performing stocks, underperforming stocks. You can use NSE site for it. And in terms of short selling, now you cannot short sell in equity. Okay, you can only buy in equity. That is one of the downside of investing. So also swing trading also is more of a short term investing only. Now short selling is a concept where you first sell a certain stock, even if you're not holding it. You don't have any, you have not purchased any stock, but first you will sell it at a certain price, and if the price has dropped down to a certain percentage or few points, and then you buy it back when the price is low. That is a scenario where you're making money and you're making profits. You're selling at a high position and you're getting at a lower position. It's moreover, a scenario where you buy low and sell high in a vice versa scenario. Now there are criterias to short selling, that you can only short sell in derivative markets, and you can only short sell on intraday. You can also short sell on swing trading, that is delivery, nothing but carry your short selling position, but that is only possible on derivatives, that is futures and options. So you cannot short sell Reliance today and hold on it, to that short position to 2 3 days. You can only short sell on intraday on spot stocks, and you can hold positions and you can do intraday shorting also or positional shorting also on derivative markets, that is futures and options. Right, you can short sell only for intraday, but you cannot use it for delivery on equity. Yes, yeah, you can. Mhm. Right, right. Sometimes it's nothing but the end of the day. Hmm. Yeah, Right, right. This was a very recent article. It's a very recent article. I think it was on Mint or something. Okay. Yeah, I understand what you're referring to. Well, to an extent, he's right because we are not aware of the internal data that they have. But if a CEO is holding stances such that people retire and all, it might be true to an extent. That I think the major problem with this is that our Indian community, okay, the traders community, are I can say everybody is greedy, but our country is a little extraordinary in that factor, and most of the trades happen on intraday. And when you do intraday without having years of experience, in most case scenario you book losses. And here's a fact, okay, even an experienced trader books losses on intraday. Losses will definitely be there, but a smart trader, difference between a normal trader and a smart trader is a normal trader cannot digest the fact that he will book losses. When he does, he gets demotivated and he can't trade and he quits. And on the other hand, a smart trader is a trader who knows that he will book losses, but he will book calculated losses. He won't wash away a big percentage of his capital. He'll make sure that if he is booking losses, he'll only book 5%, 10% on intraday, for an example. This way, you can hold yourself accountable for the losses that you make and compound it with the profits that you have as well. Mhm. I, I haven't done much of options. I recently started doing options. I'm much active in futures. And in terms of going with it, recently I'm doing reading basically. I'm not writing. Mhm. Yeah, go ahead. Trading is their main source of income. They have positions, portfolios worth 10 crore, 15 crore and all, and they have dedicated traders who are trained under there's moreover like a business that they run, fund management institute, CEOs of all these big funds institutes and all. So they are much active in options. You know, people with big money are always active in options. That's where most of the money is made. You need a lot of fun to do option writing, and people with less money can't do that. Right, right. People I know are much active in writing. Futures also they do depending on circumstances and the strategy that they follow. Writing is what I've seen people doing. Exactly. I can agree to that. Because you're going in with a very big capital and you're blocking that capital in the market. That is the sacrifice that you do. When you have higher capital, eventually your risk reduces to the strategies that you use. Uh, Retail traders have less capital and they have high expectations of making a big money on daily basis. So they have this not set the risk management due to which they make losses. Okay, questions, guys. Beginner questions, if anybody has anything. Mhm. Yeah, yeah, go ahead. Complete your question. Okay, here's an example for everyone here understanding the long term and trading basically. Let's say you graduated, okay? Most of us are youth. When you graduate, you don't have 10, 15, 20 lakhs in your hand to invest, okay? Nobody's just handing out to you. Uh, you might get family support, whatnot, but as a self owning person, you're doing a job, you're saving somewhere like 10, 20,000 on your monthly basis as your savings. What do you do with that? If you want to utilize that money, you can't go with long term trading. I'm sorry, long term investing. You'll have to go with trading for it, right? Yeah, finish up your question, Vivek. Right. There is no way you can catch hold onto it. It is illegal basically. Catching hold of a news that's not out there in the market is more of internal trading or inside trading basically, uh, and that's illegal. So you should not plan something towards that. It's not based on that. Long term investing is more about fundamentals. You understand a company's analysis, you try to see what their goals are, who's managing the company, and whatnot about the financials that they have. And then you have your capital, and you're going to decide how long are you going to hold your capital in that certain company. Okay, that's more of fundamental analysis. Insider trading is a concept which you do on intraday also, which you do on investing also, depending on the news based. Guys, there's a disturbance. Kindly mute your mic. Nili. Yes, Vivek, finish up. Tell me. Hmm. Hmm. Okay. I'll give you an example to answer your question. Okay. Let's say we are talking about a retail investor who wants to invest, let's say 10 lakh, a very basic amount, understanding an average wage of a person in our country. So that 10 lakh that you have, you're going to divide it. So if I was in a position to invest 10 lakh, I'm going to invest in, in different compounds. Let's say 2 lakh in an industry, 2 lakhs in a different industry, 2 lakhs in that, there's some different stocks. So I'll have around 5 to 6 stocks that I can finalize after doing my fundamental analysis. Now I invest that amount today and I have this mindset that I'm going to hold it for next 2 years at least in the market. Now, after holding it for 1 year, and I am in profits in 1 year because any stock will give you profits unless and until the company doesn't have bad fundamentals. Okay, 1 year is a big period at least for compounding. After 1 year, I have this news on going on that this XYZ company has done some fraudulent transactions and is not on a legitimate position to, in the court or in the government's eye, basically. Just an example. Then I'm gonna think, okay, this company, I have my investment, I have 2 lakhs in their stocks, and I'm already running in profits. I just have to make one decision here to hold that certain stock or to, close my positions and book profits. So in that scenario, even if the stock falls, it won't come back again to my entry point that I've been holding for years together. There might be some drop, there might be flat market or whatever the scenario is. I think that this company is going to fall and they are not going to function in our country anymore. I'll close my positions and find a different opportunity. So highly possible to do your analysis on it. Okay, just hold on. I think we have a different sales session going on or something. Please go ahead. No, I'm not into forex or crypto. Right. See, at first point, if you're booking losses on one strategy three times, continuously, it doesn't mean the strategy is not going to work. It means that there might be some mistake that you're making that can be corrected. Or the other scenario is the way you have utilized your strategy is not working according to the current market scenario, and you have to make a change on it. But it nowhere comes sums up to a point where it doesn't work in the market. And in a bull market, there are people who book a lot of losses even if they know it's a market. There are a lot of instances. I'll give you an example. Here's a good example. Okay. So I bought a CE position 3 days back or 4 days back, and I booked a loss of 22 to 25K on average on it. Okay, that was my loss. Now, even we are in a bull market, I bought a CE position, and that entire day, Bank Nifty bounced from 29,000 to 29,500, around 500 points up, 500 to 600 points up. Still, my CE position was dropped down by 50 premium to 15 premium, even if the entire day was bullish. So you can still book losses in a bullish market. And in a bearish market, if there is a situation where the price is on a bloodbath and the price has been falling like a falling knife that people call in the market, uh, at that time you can't test any strategies, because in a bearish market the moments are more over news based and not technicals. You know, so you need to slightly stay away with the bearish market, though there are personalities who say that they have made more money out of the bearish market. That is a fact. But here's the core deal that you need to understand as a retail trader, that when you make more money in the market, you're risking more as well. Okay, today if you're capable, I'll give you my example. Today, in today's position, if I'm in doing an intraday trade, I'm in a position to lose 10,000 per day. That's my risk appetite. I'm also in a position to make 10,000 per day. But anything that I make above 10,000 is not considered as the legit trade that I've taken. It's moreover that the market has rewarded me with some extra points that I have booked. But that situation does not work with bearish trades. If there's a bearish trend and there's a falling knife or a bloodbath in the market, you might lose, or I might lose more than 10,000 as well. And that is exactly what happened in the 3 days back position that I took. So stay away, a little away with the bearish market and concentrate more on the bullish trend, at least for the initial few months. I've been trading from 5 years now. No problem. Anybody else? Right. That is why I covered a topic before I begin this session on how you can convince your parents and how you can, talk to them. Please go ahead. Reading charts, technical analysis. Okay. Begin from my course on Meta app. Okay. Have you gone through my course on Meta? Right. Uh, Go into the finance section, choose Shashank. Over there, you will scroll down in Shashank's course. The last four modules are mine. Right. Moreover, it falls in finance only, so we decided to put it there. Okay. Any questions that you guys have with equity trading? Go over the Q&A session. Free modules. Um, I can't say it's not a viable option. It is, but you won't be able to have that, real time experience when you're trading with your live money, right? Exactly, emotions and the real experience basically. So trade with like 500 bucks, I think, losing 500 or 1,000 bucks in terms of the respect that you give out to the market to teach you about what's happening. I think it's a good deal instead of trading with a lakh on a virtual trading account. Okay, right. Uh, mhm. Okay, right. So this quote that's pretty famous, right? 99% of the people lose money in the market. That is not well understood actually. People who do intraday trading, only on intraday trading 99, 90%, whatever the calculation is, I am not even sure who did all that calculation and all. They lose money, and that's a fact. Because if your portfolio is worth 10 bucks and you're trading with stocks worth 1,000 bucks, you're risking a lot. Even if there's a 10% fall on your portfolio, you're washing away your entire capital. So that is a legit fact that most of the intraday traders book losses. And the only way for an intraday trader to be, successful is to book good profits in some trades which are strong enough to, support your losses. If you're trading 10 times and you're booking losses 6 to 7 times, it's completely fine unless and until the last 3 or 2 trades that you take, it needs to give you big returns. And this example that I just gave you, the 10 trades where 7 are losses and 3 are profit, that is how options work. Most of the time option buyers book losses, legit fact. But when they book profits, they want to make sure that the profit is so big enough that they can, consolidate or they can support the losses that they have done. Right. And for swing trading, which is the best for beginners, you will make money also and you will learn at the same time, which is a good way of going forward. Right, any questions? I'm basically a scalper, okay? Now, are you guys aware of what scalping is? I guess not. Not profits, trade basically. I'll explain you. Scalping is a concept where you trade in the market on a very high frequency. Your stop losses are less, at the same time, your targets are also less. And you enter into a trade and you try to make sure that, and let me complete. Uh, yeah, where was I? Okay, scalping is a method where you enter into a trade with smaller stop loss and smaller targets also, and you want to make sure that you're getting in and getting out of the trade really quick as possible. Either your stop loss hits, either your targets hit. Uh, this way, you can stay consistently profitable because even if you book five losses, they are going to be small losses considered to the normal price action trading that you do in the market. So I'm basically a scalper. Being a scalper for at least 1.5 to 2 years closely, my mindset has changed a lot according to the trades that I take, and it gets a little hard for me to hold my positions for long. So my swing trades hardly last for a week or two, not more than 2 weeks. Risk to reward, let's say 1:2 is really good, like the best. 1:1 is average, because that's how most of the trades go. If you are planning to book, like, let's say in Reliance, okay, Reliance can easily give you 10 points movement within a minute, highly possible within a minute or five. And in that, you scalp around 4 points, 5 points, and your losses are also 4 to 5. So more of 1:1 or 1:2. Now, here's the problem with scalping. When there is a strategy breakout, uh, usually what happens is there is a proper retracement that comes on with a strategy breakout. And with that retracement, most of your stop losses hit in the market. So to scalp, you cannot scalp with price normal price action. You have to have a multi-dimensional view on getting the best entry. So scalping is a different ball game than normal trading. Vivek, I think you have to go through my technical analysis course. You will have all the questions solved. Okay, I think we'll close the session. Let's just pick last three questions. Yeah, please. Hmm. 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 Now that depends on the person who's uploading the stories. Now I upload stories as well, but I don't do it of my students. I show my own portfolio. And recently I have done a challenge, open portfolio P&L challenge, where I'm trading. Okay. Uh, what I'm doing is I'm keeping an open P&L where I am trading with a lakh, and moreover FNO contracts only, not much in equity, and showcasing what I'm booking on every day and the losses also. So some people, put what is going on. Some people don't put what's going on, but we are not taking names and all. But here's what you need to understand out of it, that if a trader is making 50,000 in a trade, a lakh in a trade, always understand that he is also in a position to lose 50,000 or lose a lakh. Trading in most case scenario works 1 is to 1. So that's how basically you can look at all these profit screenshots. Yeah. Now depends on setup, Mad Max. It depends that how well the strong trend is, or how well you've already covered or moving in that trend. Trailing is a good way of sustaining in day trading. You can definitely trail your stop loss in swing, but there's a criteria to it. If you have covered 50% of your profits and you're above 50%, trail your stop loss by 25% and keep the same process going on. It's not indicator based. I don't support or recommend indicators, more of price action. Uh, and scalping is not, there is nothing called my price action. There is a concept of price action where you study the naked chart and you try to predict the price movement on a shorter time period. Okay, I think I got disconnected. Yeah, so what I was saying is there's nothing called my price action. Price action is a concept where you study the naked chart without having any indicators, or maybe one or two indicators, and you try to predict the price movement on a shorter time period. Now, yes, I can't deny the fact, but there is a different way of looking at the market when you're scalping. You cannot do it with the normal price action that you do. Not at the moment. The Pro League, it's I think after next 3 months, nothing before that. Right, guys. I think we can close for the day. Okay, awesome. I hope you guys something, and we will definitely do more such and such. Thank you. Um, I have a couple of videos on price action. You can search it on YouTube. Search for Wetradedaily. You'll find my future trading. You'll find option trading videos and all. Yeah, you're welcome. Okay, okay. I'll take a minute out to answer that. I would never recommend quitting college for trading. When I quit my college, I had two businesses that were running really good. I was making very good money with my other businesses, so I quit my college. So not recommended if unless and until you don't have a sustaining business that you can depend on. Right, awesome guys. I'm gonna upload this video on YouTube and I'll share the link on the main chat. If you wanna rewatch it, you can. And have a great evening. Bye bye. Okay.